Thinking Byzantine here, and today we'll be talking about Qualtrics. Now, before we get into this article, I would like to say that I'm not a financial advisor. This is all my own opinion, and please invest at your own discretion. Now, Qualtrics files IPO papers aiming for a valuation of up to $14.4 billion after spinning out of SAP. The cloud software vendor, which SAP acquired 2 years ago on the eve of its planned IPO, filed its paperwork with the SEC on Monday to carry on as an independent company. The initial pricing range of $20 to $24 would value Qualtrics at $12 billion to $14.4 billion, up from $8 billion SAP paid. Qualtrics will trade on the Nasdaq under the ticker symbol XM. Qualtrics sells software that helps business gauge how customers use their products so they can improve their offering. Brian co-founded the company in 2002 with his brother and father, giving the family around a 40% stake. So, now let's look at their SEC filing. Let's see, where is their plan? Here's the risk. Here we are. Their strategies for growth. So they're going to try making new sales with new customers, expand their products and their global presence. Okay. They'll continue trying to innovate and enhance their platform. They want to continue growing their revenue from key industry verticals, and just jointly develop, market, and sell our solutions with SAP. So SAP is definitely going to be playing a role in this company, as SAP will be our controlling stockholder. So SAP should maintain most of the control of this company. Now, here are some risk factors. Our rapid growth makes it difficult to evaluate our future prospects and may increase the risk that we will not continue to grow at our near historical rates. Okay. Let's see. COVID-19 pandemic has adversely affected and could continue to adversely affect our business, financial condition, and results of our operations. If our security measures are breached or unauthorized access to our data is otherwise obtained, our XM platform may be perceived as insecure. Okay, that makes sense. Let's see. Our business could be harmed by any significant disruption. That's true. Okay. If we fail to offer high quality, well, okay, this is all just common sense. If you fail to offer good quality support, companies or individuals will try looking for somewhere else before coming back. And let's see, the last one says we invest significantly in our research and development. So they have a high cost to make their product, and those costs could play a role in how this company operates. Okay, that makes sense. Our business depends on a strong brand. Well, yeah, strong branding does help a business. That's why you see all these cloud ads everywhere, like from Snow. You see Azure ads everywhere. You see ads for different products everywhere. Let's see, our sales cycle with enterprise and government and international customers can be long and unpredictable. And that could be a problem, as investors like predictability. Let's see. Well, SAP controls us. Your ability to influence matters requiring stockholder approval will be limited. Yeah, because stockholders and SAP will have to agree on a matter before something can be done in this company. Okay, so let's see. I want to look at their balance sheet and let's see what we have. So here's another big problem with this company. As you can tell, they're losing money. Their net losses. Well, their net losses have decreased this year compared to 2019, which is a good sign that this company could be profitable within the next few years. And then their total revenue has increased over the 9-month period, so which is another good sign. And I'm going to take a guess and say they will make around $800 million this year. And with that in mind, let's figure out the price of sales, which I already did. On the low end of the price of sales, I got a price of sales of 15, which is definitely a bit of a premium, but it's not that big as compared to their, I won't say competitors, but to other cloud-based companies like Cloudflare. I think has a price to sales of around 60, Palantir's in the 40s, Snow is in the sky. So 15, it's not that bad. Now the real question is the growth numbers, and I don't see anything that says their future projections. Probably because they don't have future projections in their SEC filings, but if they can continue growing fast, you could justify a price of sales of 15, so not the worst thing to happen. But as for investing into this IPO at open, I'll just take my usual strategy and see where it goes. Because sometimes an IPO could tank when it first IPOs, or it could skyrocket and then tank, or it can just keep skyrocketing. It's really one of those three. You're really hard to find an IPO that doesn't move at the beginning. Like the only IPO I've found so far that I have seen that did not go up or go down much was BNL, Broad Street Net Lease, and it IPO'd at around $16 and it stayed like that for a bit. Um, then we have stuff like Airbnb and Dash that IPO'd at a high price. No IPO'd and shot up fast, and then they all tanked after a few days. So if you want to get into this company, I suggest just watching this company to see how how the price action goes. So what do you guys think of Qualtrics? Is this a buy? And what do you think of the cloud industry in general? Do you think cloud is overhyped, or do you think this is the future? This is Thinking Disney. Have a good day, and please subscribe for more content.